How's it going, everybody? It's James Hallett with the Fifth Trading Company. I'm the founder of the Fifth Trading Company. Today, we're going to be going over just some, roughly just some day trading strategy and potential swing trading strategies. A lot of people have been asking me about, what are some setups we can do? It's pretty common to see like the 9 and 21 EMA crossover. That's kind of the big thing going on in the social media trading world. But there are other moving averages you can use, different types that are used throughout many different financial markets, from forex to stocks to crypto. Um, Kind of all roughly have the same type of rules. But right now I'm on SPY. You can see that we are at the 400 mark. But if you go over to studies on Thinkorswim, you just go to edit, and then you can type in just moving average, MOV, AVG. You can do the two lines, and then you're going to go to the little gear, um, and you're going to move the fast length down to 8, and then you can just bump the slow length to 21. Um, and you can just leave this as simple. Um, I do like the SMAs. They are a little bit smoother, and I have noticed there are a lot of algorithms based probably more so around the simple moving averages for the short term ones. But as of late, since the retail boom, the exponentials really popped off in popularity more than anything. So you're probably going to see a lot of like institutions and market makers playing around with being on the other side of the EMA traders. But for right now, we're just gonna stay on the simple moving average. Um, so we're going to apply that. All right. All right. So you can see they are plotted on here. Blue line is going to be your 8 EMA, or your 8 SMA, I'm sorry. And then the purple line is the 21. So let's flip over to the 5-minute chart. Right. So here we got past 5 days data, 5-minute candles roughly. We're going to go over and focus on just this past day, right? And just a way that you could probably take a potential setup. So we'll zoom out a little bit because we're going to mark the level. All right, so over here we have, previous high, right? So, as a trader, if you're going through, your charts, make a daily levels, you always mark previous high, previous low, pre-market high, pre-market low. It should be pretty routine for you. Um, but anyways, we mark, our pre-market high, pre-market low, midpoint, and then we can mark, probably one of the low points over here. We obviously have some canceled prints, but yeah. So we'll zoom in a little bit more now. We'll take basically the whole day. Okay. So right now, obviously this chart is in an uptrend. SPY is starting to really recover from the minor correction that we had. So how can you trade this setup? What is something that you can do if you're looking to day trade, maybe on the long side? Well, we have market open over here 9:30, right? And we can already tell we got a little EMA cross. And if we zoom out, we know that, yesterday, bullish day, or previous day, bullish day, and, we're still in an uptrend. So when, we don't want to fight the uptrend unless, the volatility levels are there, and the sentiment is really there to short the market. So for right now, we're gonna join the trend, but we're gonna look for, a proper entry to get in on this trend. So I do like to start, take a little trend line just as a rough guidance, because your moving averages aren't going to move, they're going to follow more so the actual price action than the trend. So this is going to be overall, the direction that we are going in. And then you can see over here that the moving averages are sticking relatively closer to the candles. So we'll zoom back in, right? So, price roughly, gapping up, doing fairly well, pre-market, right? So, we can see it's touch trend line, and we start to see that we're breaking out going into the open. We have a nice little, breakout candle here, roughly 9 o'clock, and then, here's a pullback, right? So right into going into this market open, right? We have the pullback roughly 10 minutes before, and we have this spike, right? This spike normally caused in the futures market because, not as many people are trading in the pre-market, and mostly for most of the time for the futures market, there's added volume due to having a nice sense of leverage. Um, so, right out the gate, we got a mass amount of volume, right? Boom, price pushed up here, and we're over that pre-market high. So, we would have hopefully roughly a support level that we would have had marked previously, right? Because you should be doing your due diligence on that. As we see, we got the pre-market, or the opening spike, and almost always, people are that are entering long, they're going to get stopped out. There's almost always a rejection, there's always a first point of rejection at some point where, price gets held. You got the morning scalpers that are, they're just looking for the quick gains, and they got market makers that are, loading positions, providing liquidity. So, we really got added volume in here. So most of the time, really breakouts, most of the time you'll see a nice little pop, and then, you know, you really see the pullback, and then it'll be a little bit of chop, and then usually see, the run. But in terms of this strategy, right, price over the ADMA or the over the SMA, that's to us right now bullish. You know, great that price is above it. That shows, buyers mainly are in control. Now where will we enter on this? Well, we're not going to enter so much on this spike because, the market wasn't open then. So we're going to look for, as always on an uptrend, we're going to look for the pullback. Generally, most pullbacks in bullish markets do some sort of falling wedge, bull flag looking type of thing. Like right here, this minor flag going on to the 21 SMA, and it's fighting kind of, really breaking even the 8 SMA there. But for day trading pullbacks, you're really going to want to wait for that retest of this 21 SMA. Now, where at what point do you stop yourself out if the trade goes against you if you're taking a long position here? Well, if you're going to enter off of this, it's in an uptrend. Well, you want to make sure that when the price does touch it, that it holds above. And if it does break a little bit below, give yourself a little bit of room, because market makers do look to stop people out if they're, if they're putting a lot of pressure, on the ask, they're looking to lift the offer, to hopefully flush people out, or someone's, or they're trying to get the bid to get stepped down. They're going to do that to try to shake people out. You may see, an increase in bid ask spreads. Watching the tape of level 2 is going to really help you mostly for timing your entry and exits. But yeah, we have the retest, and on a 5-minute candle, we'll probably, let's zoom in a little bit more. We got the nice wicks here, you know what I mean? The 2 separate wicks showing us that we got a nice sense of buyers. So you'd enter it off of this, and then you probably place your stop right around the low of the market open. So it'd be roughly close level. But that there was notable support here anyways, because we marked this as pre-market high. So you would end up buying this dip here, and then, or if you wanted to wait for this small downtrend to break, you could always do that. Being mindful, when these breaks happen, 2 things can happen. The break will look like this, big old halt candle, or it will break and then almost reflag again and come and retest this upper, small downtrend that it had. Conveniently, it could be in tune with, a moving average, and it may use that as support. That, that's not uncommon either. But once this price then breaks that downtrend, if you want to enter on the retest or enter on the break, you can do so. And then so long as price action stays above, the 21 EMA or the 21 SMA, that's really your point to get out. At any point, if the stock does start to break this, the 21 SMA, in theory, you would think that potentially a downtrend be coming, the 8 over 21 cross would be coming to happen, which happens here. But, we ended up finding support, and then, price continued back up, broke back over, the 21 and the 8, and then we saw a mass amount of volume here. And this will trigger any point of, if there's algorithms and scripts written around these moving averages, not particularly these ones, but any sort of moving average, you're going to see some sort of buyers step in, whether if that's computers or if it's human trading, you're going to see some sort. There's always some sort of reactive price movement for any sort of indicator indicating something, or, conviction, because there may be an algorithm written where they'll signal this 8 over 21 cross, but at the same time there may be a stochastics cross with it, or the DMI oscillator is, sending a buy signal, or maybe your TTM squeeze is sending a squeeze signal, or there's always more convictions to be added to this. So if multiple principles fit, you may see more added volume here. Like maybe there was a trigger that, after the first retest of 400, which, essentially happened at this level, maybe the first pullback, okay, then we're going to, trigger a buy, which, first step. And then, when price started to alleviate a little bit and come down, that's when you saw the mass amount of buyers. A lot of people got stopped out here trying to go short, because generally the methodology for first touch of a major psychological support, most people tend to try to short that level to get a massive rejection of. But in terms of SPY's case, SPY had a nice slow buildup in this 390 range all the way up to 400. So in terms of having a massive rejection, that really wasn't there, because there was already a buildup in consolidation going up to that, just even switching off to the 4 hour, you have this massive consolidation, and then the little correction that happened, days ago. This was all stuff for SPY to be gearing up for that move. So in theory, of people trying to short that, it really wasn't there because it was already loaded to be pushed higher, and it had already made the really a correct move to gear up for a move to all-time highs. And it's hard to fight these uptrends, and volatility purposes really have to be there for you to you know find that the massive short. When people are trying to short the top, you can't short the top if the volatility is not there. That if the volatility is not there, there's not enough short sellers, there's not enough people buying puts for protection. You know, you got to make sure the right principles are there to do that. But in terms of a strategy like this, you can really become systematic trading this, because you can develop a simple set of rules around this. Um, you know, Generally, let's say you could make up a rule that the third touch of the 21 SMA support, that'd be your time to get out. Here's your entry, 1, 2, and then it broke on the third. Okay, that might be your get out point. Or maybe you'll get out at the first touch. Maybe you're okay with this, this little spike in this gain. And then or maybe you'll take profits when the ADMA breaks on a bullish run, because you've already caught, this little, roughly, dollar gain, let's say. An option that may be, if you're trading at the money, that might be an extra $50 in your pocket. Depending if you're, trading in size or not. But if you're buying one lots, then probably only get $50. But let's flip to, in terms of really making this be able to, let's say, be a swing trade, right? You know, Trading on the hourly, or actually, we'll flip to back to the 4 hour. 4 hour is my favorite swing. Um, you know, we have, the downtrend, right? So, in terms of price action, right, we're going to draw the downtrend, right? And, price broke back up here. So, okay, we got these wicks. We know that buyers are stepping up. Now, if you're in terms of trading off of strictly rules of this setup, you're going to wait for that retest of that 21 EMA again, and it should line up with some sort of support. We can see obviously this massive wick that came down and touched the purple 21 SMA. We know that there's buyers in this range. There's a demand for SPY down here. So this is notable that we could potentially enter in. We got the break, and this is what I was talking about. Break of the downtrend, right? Here is that breakout. And then look, we had the retest. Retest happened to be in line with the 21 SMA. And then that would really would have been your buy, right? So if we flip back over to the 21, over the hourly, what day was that? That was Friday into Sunday. Oh, shit. Wrong chart. Right? All right. Here we go. That's that retest. That's that retest I was talking about. So in terms of, if, price touches that, all right, then your principles for stopping out, okay, then set it for whatever the previous low was. Okay, here's a nice low that we had saw. Or if you wanted to take the one right here, I don't think that's enough room, because if someone's hunting for stop losses, that all it takes is that one little dip and boom, they've already stopped you. So on a swing trade, you got to give stuff a little bit of time to breathe. If you purchase enough time, if you're trading options, give it enough time on the contracts. Purchasing equity, then you just got to have a little bit of patience and set your stop slightly lower than where obviously everybody else is getting stopped out at. All these wicks are telling you that price came down here, boom, and then it got bought back up. So you don't want to be where all the fish are down here getting stopped out. So if we have this test of the 21, then we're going to look to buy down here. And if we're looking to swing into potentially the next day, momentum's really got to be there. And you're waiting for the larger frames. If you're getting over, let's say, the 8 SMA, the larger frame that happens on, the bigger potential the daily move is going to happen, right? So even though we have a nice little cross down here on the hourly, making sure that lines up on the 4 hour, is going to be, we had this cross back here, then you see these daily massive moves happen. And let's try to find something. What's down right now? Or even Zoom. Look at Zoom. Right? So even if you wanted to go really bearish on Zoom, right? Same principles, kind of, the cross happens, breakdowns, right? Zoom into this area down here, right? So, Zoom's still on the downtrend, potential to break, it's flattening out. But, if you were to, short any of these, the minute price breaks under that 21, that's really a short. And most of the time, if it breaks under, wait for the retest of the 21 SMA. That's where you're going to activate. You have that, see this top down wick right here, telling your sellers the massive volume came in and kicked it down. And then really just trading and chop at this point, right? Because you see these, you got your moving averages kind of sideways, but if price breaks below here, you're going to see that eight's going to go whoop, drop right down. And then you're going to see the waterfall. And then when the low gets cleared, the bid probably drops below 300, where you obviously have people sitting on the buy button down here. It's going to crush itself. And in terms of trading this on the daily, right? Like if you see any sort of reversal candle, right? So right here, here's a perfect example. This big green candle, bullish engulfing, bullish engulfing off support, and it's right at a gap level. So that's kind of a key level, pierced into a gap, and then big activation of buyers. So when you see this huge candle come up, bullish engulfing. If you've done your homework and your candlesticks, a bullish engulfing is a signal of an uptrend coming, right? Granted, this was a short uptrend in roughly a month, but it was still there. So you saw the bullish engulfing at support and it broke back above the 21 SMA. Then to you as a trader, okay, even though I necessarily don't have a bullish cross, I have a bullish principle that, we have the candlestick charts. And if there's a reversion in volatility, you're seeing this reversion in volatility come down from all-time highs on Zoom when premiums were fucking shit high. Now you have a reversion of that. It's mean reverted now. So that's another thing. If volatility is mean reverted and, put sellers are closed out and short sellers are closed out, that's double conviction for you. So if price breaks above and then, follow your same rules, wait for the retest. Even on the daily, you'd take whatever the level was, which at the time was 352.06. That would be, your buy spot. Look, if it can hold support around there, that's where you'd pull the buy trigger. Bang. And then, obviously it's going to come up, come back down. And that's for if you're getting hammers. So even here, right? This could have been, let's say, this is a bullish or a bearish candle, still technically in a bearish market. That could have been a potential short opportunity. If you're looking to short the uptrend, short the spike, breakdown, it is what it is. Be mindful. Obviously, there's still buyers coming off of this range, so that's not a trade idea, but just for an example and learning purposes. I hope this helped. Actually, let me go real quick. Just for someone asked me, what are there any like aggressive moving averages in terms of really or scalper-based moving averages? Really, out of the testing I've done, the 513 combo is really the only one that probably picks up in terms of the right activity that a scalper needs. I wouldn't ever recommend a scalper strictly use any moving average to really directly trade. Scalpers are better off really just using raw price action. But like I said, reactive for sure. Your principles be if it breaks under the 5, you're fucking out. Very reactive. I do like this combo actually on the weekly chart. Quite a while back, I had shorted Roku off this strategy. Let me swap to the weekly. Yeah, I had the basically a nice little death cross. Once this kicked in, you saw that huge candle, really kicked down and made for a nice short. Roku, I think, is going to end up coming back up though. Look for the price, to get above this 21 mark. Probably not be a bad spot to enter, and it's held decent support. Trade actually took later in the week, earlier in the week. But yeah, very reactive moving average, definitely the most probably volatile. You know, starting to kind of curl up here. It's definitely more reactive than the 9 and 21. The 9 and 21 EMA combo, I mean, definitely safer principles to probably use that. It's like I said, not as volatile. Your same principles, your 13 would be like your stop, similar to how the strategy was for the 21. But I would stick the 8 and 21 combo that I had mentioned before with the simple moving average is definitely a more wide common strategy than this 513. But there are other combos you can use. Just to be mindful of that. If you like this video and it helped you, please like and subscribe. Join the Discord server. Constantly growing community, almost 3,000 members in there. Glad to help you trade. Thank you.